What's up, everyone? It's week 13. Means we got 2 more weeks than finals week. Hopefully, most of you will not be joining me for finals week. Not because I don't want to see you. Just the whole plan is that you don't get to dodge the exam, and dodging a final exam is always a good thing. Can we agree on that? If you don't agree with that, come join me on finals week. It'll be a fun time. It'll be a comprehensive exam of everything we talked about in this course. But if you're just kind of like, I'd rather not, Dr. Barnes, then keep that in mind. Keep that in mind. So as we get closer to the end of the semester, we got kind of a snowball of all things coming up. So let's just go ahead and make sure that we know what's going to be happening over the next few weeks, and everybody can plan accordingly. This is all in the syllabus, but I just want to remind you because I don't want anything to be left by the wayside. So today we are doing our final content lecture of the semester. Okay, yeah. Go do some sort of celebration on your own. Keep it low, not too loud. So it's going to be one of the more interesting ones, blockchain and AI. And then we're going to have homework on Wednesday. Wednesday will be a very short class. It'll probably be 30 minutes, 40 at the most. So we're going to go through that, get all that done. Friday is our exam review. So preparing for a second exam. You guys know my policy is that make sure you review the study guide and complete the exam before you come into class, because the whole goal is to make sure that you know exactly what it is you can get right and what you don't know. If you don't do the exam beforehand, kind of defeats the purpose. So also make sure you review the entire study guide. I know it's a lot of material, but if I don't cover something that you have questions about, that's the opportunity you want me to want to have me to answer questions. Monday's the exam. Wednesday will be the exam discussion. Friday, I think I've already said this, but we will not be meeting a week from Friday. So the week before, the Friday before Thanksgiving. It's kind of my traditional policy. I do that for Thanksgiving and then also spring break during the spring semester. That is about 95% certain. Again, if everybody decides not to show up on Wednesday, we will be meeting next Friday, or some of the other one of the dates. You guys have been on pretty strong behavior the entire semester, so I think you deserve that reward. But there's always time. There's always time for corruption, I guess. You do have an assignment that's due next Friday. That is your second AI deliverable. That is your AI research project in its entirety. You do not need to prepare your presentation for me, present that. You just need to send me your deliverable, your results of research. If you want to work on your presentation over break, I have no judgment, okay? Final week of the semester, week 15 is your presentation. You may want to go look at the presentation deliverable. It is a little bit non-intuitive. It's not consistent with other presentations. It is 3 minutes, 1 slide. Now, I want to clarify that with respect to that does not mean that you should spend 3 minutes preparing that 1 slide. You will need to think about this in a lot more detail. It is a lot more challenging to present a good, succinct analysis in a short period of time than ramble on for 50 minutes like I do every class period, okay? If I were to try to present all this information to you in 3 minutes, I would have a challenge doing so. You should have a challenge presenting your material in 3 minutes as well, especially since I'm only giving you 1 slide to do it. So you will need to think about it, and I will be evaluating how effectively you conveyed your message within that 3 minutes. By the way, if you're not using close to 3 minutes in your presentations, you're doing it wrong, okay? This should be a challenge to get below 3 minutes, not a challenge to get to 3 minutes. So if you're just like, oh, I finished that in a minute, that was easy. Yeah, you might want to rethink about whether or not you're covering the content effectively. Also, with respect to that, I do have a sign-up link on Brightspace. It's in the week 15 content folder. If you've already signed up, great, you're set to go. If not, there's exactly 1 presentation space on Wednesday, and there's several presentation spaces still left on Friday. Once 2 days fill up, you're by default going to that last day. So please, if you have a preference on day that you want to present, please make sure you get that done sooner rather than later. Again, if you don't sign up, then all the slots on a certain day have taken up, then I'm going to by default put you in that date. I just recently finished the presentations in my advanced AIS class who are following a similar format, and a lot of people got put on Monday who probably didn't want to get put on Monday, but that was it. They came back from break and immediately presenting. So if you're just very much against that and would rather prefer to present on Wednesday or Friday, please make sure you get signed up ASAP. Also, please do not delete other people's name and put in your own name. Google Sheets does track that activity. I will be able to tell that you did that. If you do that, I will be very displeased with you, very displeased. I'm not going to say it's academic misconduct, but it's close, okay? All right, and then we basically got the end of the semester. After the second exam, I will give you a debrief about where everybody stands in the course. I will give you kind of a projected grade analysis, and I'll go through the details about that, how I came up with that information, and that will let you determine what your situation is, whether you can opt out of the final exam, and whether you want to opt out of the final exam. I will say, as I said at the beginning of the semester, most people, like 90% of the people in my classes, have chosen to opt out of the final exam because they've got other final exams they'd rather focus on, and I respect that. I have had some students who have said, I'm at a C or I'm at a B, and I think I can get to the next final grade with a good performance. And if you think you're in that situation, first of all, I would encourage you to come talk to me about that to make sure that you understand what your situation is. And then secondly, you can evaluate whether or not it's worth your time to study to try to get to the next letter grade. It has been successful for other people in the past. I won't say it hasn't been, but it is something that you do need to seriously consider because it is a stern time commitment that you're going to have to put forth during finals week to make sure that you're prepared. For context, I believe the final exam date for this course, and I don't have the syllabus open, it's in the syllabus, but I believe it is on Tuesday. I believe that's 1:30 p.m. I could be wrong about that. It may be 11:30, but I don't know. I guess I could check that, but I'm not going to. We're not quite close to that yet, but I'll give you an update on that. And if you're just curious about what the final exam date is, I do know it's Tuesday. I'm almost 100% certain. Like, actually, no, I'm not even certain about that. Yeah, it's maybe Monday. Yeah, Monday. Yeah, okay. My apologies. So I got confused with the auditing class, and that's on Tuesday. So Monday, I believe it's 1:30. 11:30. Okay. I completely butchered that, guys. Okay. The old man is losing it. The old man is losing it. You can't trust anything I say today. Monday at 11:30. All right. But again, my impression is most people will not be taking the exam with me, but we'll work through that, and I'll talk a little bit about that after finals week. But we got a long time before that comes up, a little over a month. We still got another chapter to talk about. So we're going to talk about blockchain and AI automation. So let's start out with blockchain. How many people have heard the term blockchain before? I saw 0 hands there. I'm assuming 100% of the people have heard it. It's like, it's just too much work to raise a hand, Dr. Barnes. It's too early in the morning. It's 11:30, guys. Come on. Blockchain so what is blockchain often associated with? What term do you actually often hear in context of blockchain? Blocks like we put together back when we were in preschool, stacking those on top of each other, and then chains like those little plastic ones. That's blockchain, right? That's what we're talking about. Yeah. Boy, this is going to be a rough one today. Oh, okay. So we're talking about crypto. By the way, I expected this during the internal controls lecture. I didn't expect that during the blockchain and AI automation lecture. I expected enthusiasm. It was like, yeah, crypto assets, Dr. Barnes. We know exactly where you're going with this. All right. So we're talking about crypto assets and cryptocurrency that kind of emanate through blockchain. And if you don't understand the linkage and are interested in it, there's a video that I have referred to kind of passively throughout the presentation. It's a video on YouTube. It's a very good explanation of cryptography. It's called, But How Does Bitcoin Actually Work? And it kind of talks about the inception of why blockchain and cryptocurrencies are interrelated with one another. And so I'm not going to go into a lot of depth on that. Suffice to say, I'm going to cover it at a very high level of detail, but it's very interesting to see how they came up with the solution to a pretty big problem and what the solution was for that. But the origins of this actually come from Bitcoin. It's actually a white paper called Bitcoin, a peer-to-peer electronic cash system by Satoshi Nakamoto, and this was in 2008. Now, can anybody guess why I have Satoshi Nakamoto in quotation marks? Do I often put quotation marks around people's names? Like when I call on you, do I say, quote, Michael Barnes, unquote? Do I call on you like that? No. So why do you think there's quotation marks around this individual's name? This individual doesn't actually exist. Okay, at least that's not their real name. This is a pseudonym. There's no knowledge of who Satoshi Nakamoto really is. This was somebody or a group of individuals that came up with this idea, and they didn't want to be identified with it because it was an outrageous idea back in 2008. Now, the interesting caveat to this is that this is the creator of Bitcoin and the Bitcoin system. Bitcoin is currently trading at just over $100,000 per coin, and Satoshi Nakamoto has the rights to 1 million Bitcoin right now. So if you're Satoshi Nakamoto, you basically got access to 1 million times 100,000, which I don't even know what the math is. It's a large number, okay? It's basically, we're talking Elon Musk levels of wealth right there. And so, yeah, there have been a lot of people who've said, I'm Satoshi Nakamoto and failed the test. And there's been several people who have said, I'm not Satoshi Nakamoto, but that goes unchecked who this individual is. or this group of individuals is. But Satoshi Nakamoto, whoever they are, came with this idea of a distributed ledger system based on resource-intensive mining that eliminated financial intermediaries. The book calls these middlemen. I like the term intermediaries better. Now, what does this all mean? Well, the idea being is that the kind of traditional bookkeeping system that we have in the world and that we operate with is very inefficient. There's two really important points to note is that, first of all, we have a centralized ledger system, and that's kind of traditional for all organizations. Even though if it's on the cloud, it's going to be something that's in one location and everything uploads to that single location, which creates problems because if somebody knows how to manipulate that information, then they can do unsavory things, commit fraud, which is problematic. Another problem they identified is they noted that all transactions majority of transactions that exist nowadays rely on the use of middlemen. And we tend to think of these as financial institutions, often banks. These can be not banks, but other types of financial institutions like credit card companies that are not traditionally banks. Now, think about this. Let's say that you go to Hy-Vee and say, Dr. Barnes really made me hungry today. I'm going to go get the ingredients for a cheeseburger. And so you buy your cheeseburger ingredients and you go through, stand in line, and what do? You pull out your wallet and you pay with cash? Probably not. I read something on the line was basically saying your generation is the generation least likely to pay with cash. Some of you may still do that, but I think most everybody in this room would do the electronic transactions. Okay. So what are the parties involved in the electronic transactions? There's you, there's Hy-Vee. Is there another party? Yeah, there's the party that's going to pay on your behalf. Okay, that's going to be the institution, which basically means that there's going to be some sort of financial incorporation in there. So third party is basically kind of holding up the works. And there's a lot of concerns that go along with that third party. Is the information going to be conveyed from that third party effectively? Do they have your best interest in mind? Are they going to be able to pay you in a high and an effective manner? Are they going to charge for their services? All these things that go into this accounting. So what they came up with, Satoshi Nakamoto, whoever they are, said, what if we just create our own currency? Because currency is just something that has value for exchanges. And we eliminate these parties in the middle. We just basically say the transactions are going to occur between two parties and we're not going to have any financial institution. So I've got 10 Bitcoin. I pay you 10 Bitcoin for a transaction, like buying pizza, which sounds outrageous because that's the most expensive pizza in the world right now. But that's actually the very first Bitcoin transaction is Papa John's accepted 10 Bitcoin for a 2 large pizzas. I believe it's 10 Bitcoin. It may have been something much larger, which now that Papa John's delivery driver is probably kicking themselves that I really wish I'd ask for a Bitcoin tip, So yeah. So online, it's going to be something that takes place online. It's electronically, which means it's faster and it's lower cost. It's peer-to-peer. There's only two parties. And the interesting one, we're going to talk about this in a little bit more detail in a second, is it's trustless. And this sounds like a bad thing, but it's actually a good thing. We do not have to trust a third party to arrange resource transactions, to arrange for the custody of resources and the exchange of resources. So trustless system is going to be something that's going to be an advantage in this particular context because there's not really a need for other trust services. Now, just for context, here's a traditional transaction system. It's centralized. It requires an intermediary for recording approval, and there's only one copy of the ledger. The blockchain system says, I want to operate in a different manner. I want to have decentralized and distributed ledgers. So instead of having one location where the ledger is, there's a decentralized system where everybody has a copy of the ledger. Imagine that we're all on one blockchain together. Every single person in this room would have a copy of the ledger. And anytime the ledger updates, it would update on every single system simultaneously, which creates an interesting consensus node because basically that point becomes, all right, if the transaction exists and everybody agrees that transaction is legitimate, it's going to be updated and validated. So the multiple copies of the ledger is going to be really important. Also, this need for synchronous updates is really, really critical, which only exists in the day and age that everybody can be constantly connected to the internet nowadays, which has only been around for like 20 years. I know most of you have kind of existed in the situation where you've always had internet connectivity and it's always been ever present. That was a fairly recent event that did not exist shortly before Bitcoin. I say 2005 was really the first time that I really saw businesses being able to operate like that. I remember when I was in college at OU during the master's program, and I had to actually still use dial-up to connect to the internet because we didn't have a constant internet connection. So there's that. And then the system is fully transparent. Now, talking from an accounting and business perspective, how do we value transparency? Is transparency a good thing or a bad thing? Well, think about what the whole goal of that 220 class that you took, Remember you took 220 and you learned how to create financial statements, how to read financial statements? What was the goal of that? To be able to interpret financial performance of an organization. The more transparent the information provided, the better judgments you can make. So transparency is a very good thing, which having a fully transparent system would be a much bigger boon than having a opaque system that doesn't provide this detail. So why do we want to use blockchain? What are some areas that we can talk about? So it allows multiple parties to collaborate using a shared system. It accelerates the speed of transaction verification and settlement. It reduces the cost associated with external verification, and part of that has to do with the nature of the system itself. Now, without going into a lot of detail about external verification, basically we inspire others to do the work of verification for us. So I'm gonna encourage you that if you really want to know how this process works, that you watch that video that I talked about at the beginning about how does Bitcoin actually work. If you're really interested in the technical details, that does a pretty good job of describing it. But I'm going to use a very, very kind of a lax example because I think it's a little bit easier to digest. Let's say that we all decide to get together for Thanksgiving, okay? We're not, but let's assume that we all decide to get together for Thanksgiving. And we've got 28 people in the room that are all like, I want to cook something because I enjoy making dishes for Thanksgiving. And so we have 28 different dishes, but we have 0 people that want to actually do dishes, okay? Actually do the cleanup for dishes. So we have a problem. Somebody, or we're all going to contribute, but nobody wants to do the work of finishing the activity. So I say, I've got an idea. You know, Dr. Eisen will do anything if you ask him nicely enough. Okay, say, Dr. Eisen, you can actually come and join our Thanksgiving dinner if you do the dishes afterwards. Like, okay, I don't mind doing dishes. Yeah, I'm working on my Dr. Eisen impression. Yeah, so yeah, I don't mind doing dishes. I'm cool with that. And so he comes in and he does the dishes. So he basically gets paid in some of this food. He doesn't have to prepare the food himself, but he gets paid in doing the food or in doing the dishes, doing a service for us by getting some of the food. That, in a nutshell, is how external verification works in a blockchain system. Remember that mining process we talked about earlier? We referred to mining. All that mining really is somebody who provides a proof of work for the block, who actually says, this ledger is verified, this is the correct ledger, we've proved it that it's the correct ledger, therefore we've done the process. By providing the proof of work, that individual or group of individuals who do the proof of work get issued a crypto asset, a piece of crypto asset. In the case of a blockchain for Bitcoin, they would get issued 1 Bitcoin, or a portion of Bitcoin as it now is, because it's actually don't issue full Bitcoin anymore. So it shares transaction system transactions with all parties, which is really good. That synchronous updating that we talked about. And probably one of the more interesting ones, once transactions are confirmed, they cannot be altered. Now, this is interesting from a fraud perspective. This actually restricts the amount of fraud that can occur after the fact. In traditional systems, the way that fraud frequently occurs is there are adjusting entries or manipulated entries that go into a system that alter the basis of organization. In a blockchain system, they can't be altered. Once they have actually been validated, once the proof of work has been reached, then those transactions stay that way and they cannot really be altered. Again, I'm not going to go into the reason why. I would encourage you to watch the video if you want to go into the depth about that. But yeah, they can't be altered after the fact. So there's 4 types of blockchains that we're going to talk about in this course. Now, the book talks about 3, and the homework will refer to 3. You will be responsible for all 4 for this for the upcoming exam. So the 3 that the book talks about are going to be public, private, and consortium. Now, public is one where everybody can participate. Anybody who wants to participate in the block can. There's no central authority restricting permissions on the block. The permissioned ones are going to be private, which is controlled by a single authority. So you have to have approval from that authority to be able to be on the block. This is usually if a single organization holds its own block or its own blockchain system, then you have to be given permission to participate in transactions on that. Or there could be a consortium, which is basically a shared responsibility blockchain. So individuals who operate on the blockchain are going to they each have a permission process, so usually controlled by the entire group as opposed to a consensus of one individual. Now, in between these, we've got something called a hybrid blockchain, and this one's not it's fairly recent. It's not as common as some of the other ones, but it's becoming more prominent over time. And the hybrid blockchain basically says that it's controlled by a single authority, but there's some sort of permissionless process. So people can join without permission, but there's still going to be some oversight of the blockchain transactions by a central authority. So it's basically a combination of a private and a public blockchain with elements of each being incorporated there. Now, as we start seeing expansion of transactions and more incorporation of individual transactions going to be especially with the crypto assets seeing public trading. Hybrid blockchains become more and more common. So these are the four that you have to know about. And basically, you just need to understand the big definitions for those. Now, what are some opportunities with respect to blockchains? And what are some areas that we can talk about? So the first one's one that I'm pretty passionate about. It's this idea of continuous auditing. Okay. So when we take our those of you who are going to be in accounting majors are going to take auditing with me in a semester or two. And one thing we're going to talk about is we're going to talk about the historical basis of auditing. Now, the way auditing works is that we look back in time and we see the results of a previous period and we test those results. All right. Which is great if you're a smaller organization. But nowadays we have organizations that are literally trillions of dollars. I was looking at the three largest organizations in the world, okay? Three largest organizations in the world, NVIDIA, Microsoft, and Apple, are all right around $4 trillion in market capitalization right now. Now, does it make sense to treat them from an accounting perspective the same way that we treat all other organizations from that same accounting perspective? Probably not, because they have massive technology and millions of transactions that occur a day. So one thing we probably want to do is kind of validate information on a more timely basis. With the technology that we have, especially with blockchain technology, we can do that on a continuous basis, constant, as things are going on, as opposed to trying to do it after the fact. That doesn't mean that traditional audit will go away. It just means that we can have a more current system in place, costs a little bit more, but provides more up-to-date results. Then we also have these things called smart contracts. And I say the word contract, and I worry that Scotty T is going to run into the room and say, did somebody mention my name? But not those type of contracts. We're not talking about Professor Templeton's contracts. By the way, does anybody else call him Scotty T? Okay, don't do that to his face. No, yeah, don't do this to his face. He's going to say Dr. Barnes got to you. Unless he's approved you to call him Scotty T, that's okay. So a smart contract is basically programs that are stored on a blockchain that run when predetermined conditions are met. In other words, if we know that transactions are supposed to occur under certain conditions, a smart contract can be programmed to basically fill in all the blanks that are necessary for that transaction to occur. Now, easiest analog I can use to this is going to buy something on Amazon. Has anybody bought stuff on Amazon before? Okay, yeah, not raising hands, but nod heads. I got that one. Okay. All right. So if you bought transactions on or bought something on Amazon before, when you engage in the transaction, you identify what it is you want to buy, and then Amazon basically does the work for you. So there's a contract point which basically says this is the good that they've agreed to buy. They've specified quantity, they specified payment method, they specified shipping. All the terms are complete. We can fill in the transaction and finish that transaction for them, which is a very, very efficient system. One of the reasons why Amazon is so efficient is that you don't have to get up and go to the store. You don't have to find the item. You don't have to go check out. You just basically point and click, and it's going to be delivered to you. Especially if we got Amazon Prime, because then it's all free. All right, but that's kind of an example of what a smart contract would do. It could be to a much greater extent, though. It could actually be just not for buying single goods on Amazon, but for really large transactions and large contracts that might actually be in place. There's going to be new job opportunities in traditional roles, non-traditional roles. So what we're talking about for traditional accounting and business roles and what you would see in the real the world from like even 10 years ago are going to be completely different, especially with this evolving landscape of cybersecurity and how crypto assets are going to play a role in that. Blockchain knowledge is going to be really important. And so there's going to be opportunities that don't really exist in current form right now. There's also the evolution of cryptocurrency. So these are just kind of some things that I point up there. Obviously, there's Bitcoin. There's also, if you've ever heard the term HODL, HODL has actually started out kind of as a movement back in a couple decades ago when the cryptocurrency started out. There is actually now a cryptocurrency called HODL, but it's very, very small in market cap. But HODL was basically kind of saying, try to follow traditional investment strategy. If you buy a crypto, you hold on to it. You don't try to day trade. You just basically hold. And it's a misspelling of the word hold, which is why it's called HODL. Yeah. So the more you know. And then this one right here. This is Dogecoin. Has anybody ever seen the Shiba Inu meme for Doge? So the whole story behind the Dogecoin is that this started as a meme for people who saying people will buy anything if they think it's cool enough. So they basically created a new coin on the blockchain called Doge. And in fact, that's exactly what happened. People started buying Dogecoin. So it's like, hey, why not? It's Doge. I like Doge. Doge is cool. Okay. Dogecoin currently has a market cap of about $30 billion. Okay. This is started entirely as a joke and is worth $30 billion. I can't value any of my jokes anywhere in that ballpark. I've never told a $30 billion joke. The most I've gotten is like close to like $1.5 billion. Okay. I've not even that. That's fairly escalating. My jokes are pretty much worthless. So let's be honest. So yeah, yeah. Wow. That's all we can say about that. Now, some interesting challenges exist in blockchain. So first of all, important protocols are not present. These are not kind of not sanctions. We don't need to know. We don't have knowledge of what the required speed, confidentiality, and most important governance are in this area. There's a very, very strict lack of oversight, not even just at the governmental level, but also at the organizational levels. So with blockchain, there's not really too much knowledge in this area. And if organizations are going to be using these technologies, then they need to understand the proper use of them. Probably more importantly, is that current enterprise systems, they're not compatible with blockchain technology. So if we think about the way the ledger system works, is the distributed ledger. Most enterprise systems are operating on centralized ledger systems. So that's obviously not a compatibility right there. It's like when you bought Legos and your parents bought you generic Legos and you tried to use your old Legos with the current Lego, the generic Legos. They don't fit. They don't work together. It's kind of the way that we operate now and nowadays with blockchain and traditional systems. And most organizations have to make a choice. Do we operate with one or the other? Because we can't use both together. Current skill sets necessary for blockchain are lacking. Even though people know and they love crypto assets, the knowledge of blockchain is particularly missing. The organizations that are using them right now, the executives that are in there are oftentimes from a generation before blockchain and crypto assets were really prominent. Even the current generation that's coming in and knows a lot more about blockchain and cryptography and cryptocurrency than I do, still do not have a comprehensive understanding. I will tell you right now, this is not an environment where I'm going to teach you and make you completely knowledgeable about blockchain and cryptocurrency. I would say we don't really have anything that's equivalent to a blockchain accounting course or a blockchain business course. So you're not going to walk out of Tribune State and be completely totally competent unless you do that on your own. So that's something that I think is a big gap in learning. We probably will see some prominent increases in that, but there's so much stuff that we're trying to learn about and try to evaluate that's becoming problematic about finding what is relevant and what's not. Probably the most important one is that blockchain systems are difficult to evaluate, regulate, and govern. So there's a lot to unpack here. So first of all, remember when we talked about that blockchain was supposed to be and crypto assets are supposed to be trustless systems? That was with the idea that these were going to be used exclusively as currency. But when I say the word cryptocurrency, what do you think? Do you think, oh, I buy pizza, I buy groceries out all the time, Dr. Barnes? Or do more people think, I invest in cryptocurrency? We treat it as investments, which means that it's an external resource. So that becomes problematic because who holds that investment for you? Do you hold that investment or do you have some sort of outside intermediary that holds the investment? You probably have a trading partner, okay? Whether that be like an investment advisor like Robinhood or whether that be an exchange system like crypto or a Binance or something like that. The problem with these is that we get back into the same problem. It's a third party, okay? Instead of being a bank, which is heavily regulated and insured, now we've got a third party that is not regulated at all and could actually collapse under certain scrutiny. How many people have heard the company FTX? They fell apart about a year and a half ago. They were headed by Sam Bankman-Fried, and FTX was a fiasco. It was a cryptocurrency exchange platform that had no real protocols or presence in place. In fact, if you look on Brightspace and you see the image that I have for this particular course, it's actually a meme I made about FTX. I read Going Infinite by Michael Lewis, and all I kept saying is, why don't they have an accountant? They need an accountant. Where's the accountant? They did not have any accountants at FTX. They were doing all the transactions on QuickBooks, which is fine if you're a mom and pop shop. It's not great if you're a $30 billion company. Okay, so yeah, certainly problematic in that. Also, with blockchain systems, we're starting to see problems with fraud of different type. So some examples of this, these are some ones that I think. Back in 2021, there was a TV show that was really prominent during the pandemic called Squid Game. Did anybody watch the Squid Game? Yeah. In the craze, there is actually a crypto exchange or crypto open that was going to be a Squid Game crypto coin. Okay. So everybody kind of said, this is what I want to be in because this is the big thing. This is the big hubbub right now. And a lot of people invested in it, and it turned out to be a giant scam. There was no actual coin. It was just people taking your money and then running off. And so there were warning signs, certainly, by the way, on this. The fact that people could buy the crypto coin, but they couldn't trade or sell it. That was probably a big issue, a big scam. The fact that there were noticeable typos on the page where you bought the crypto coin, probably not a professional platform if there's noticeable typos. Probably more relevant is going to be one that I actually encountered today. I was reading through the news this morning, and so this is from yesterday, but I was reading it this morning, talking about crypto scams. So this was a story about an individual who basically spent $280,000 on a crypto scam and got basically fleeced for that entire amount. And it was this process called pig butchering. Has anybody heard of the term pig butchering before? It's basically somebody who's sympathetic to you and comes up and tries to become friendly and say, "Hey, there's a crypto environment that's no risk to you." And they'll give you small returns to try to get you to increase the investment. And then once you increase your investment, they'll pull all that out and run off. So I don't know if any of you have received text messages from random people and they say, "Oh, this is a wrong number. I apologize for sending you a wrong number. If you're ever in the LA area, we could meet up and we could talk a little bit." Or, "I'm sorry, are you okay? I apologize." There's all of these text scams that are going to try to basically become very, very close to individuals and try to get you to influence. Interestingly, it's probably my generation that's the most influenced on this because we're a lot less knowledgeable about things like this and tend to be a lot lonelier than the younger people. So if anybody's going to fall for it in this room, it's going to be me that's going to fall for one of those scams. Except I know about the scam, so I'm probably not going to fall for it. Anyway, some interesting stuff going on with respect to that. It's kind of problematic, certainly. All right, so moving on, we're going to talk about AI. Now, I know we've already talked about AI. We're going to talk about some of the technical stuff, which means I'm not going to go into as much detail in some other areas. But let's go ahead and talk about some things that are going to be high-level artificial intelligence concepts. So AI represents computerized performance of tasks that are traditionally associated with human intelligence, such as logic, rationality, visual perception, speech recognition, and language translation, which we've seen in droves just through the examples that we walked through in this course. Now, a few things to note about this. I did put a little bit of a footnote on here that AI is referred to as cognitive technologies. The only reason I mention this is because this is in the book and it may come up in homework. It's probably not something that you're going to encounter in a lot of context, but I just want to make sure that everybody was aware of that. If you see the term cognitive technologies, that's just a fancy term for AI. And then the book actually says that McKinsey Global Institute predicts AI could create $5.8 trillion in value across all business sectors. Now, there's an interesting point to this. We actually talked about this in big data, is the annual GDP of the world, global GDP is about $100 trillion. So we're talking about 6% of that. I think this number is undershot right now. I think this number is too low. I think AI is going to represent a much larger trend for that in the future. It really depends on who you talk to, though, because some people think AI is rapidly increasing and pacing and change. Some people said we've kind of hit a peak and we've hit a ceiling and we're not going to go much further than we're at for a long period of time. It really depends on context, but we could say probably at minimum $6 trillion in value. It may be eclipse that pretty substantially depending on the pace of change. So what are some examples, some traditional examples of AI tools? Well, we've got one that's pretty knowledgeable. So we got bots. These are ones that have existed in some shape or form for a long time now. We've already talked about how chat bots operate to some degree, but bots have existed with smart devices and with computers for a long period of time. So I know that everybody's probably familiar. If you've got an iPhone, you're probably familiar with the bot on here. It's Siri. Okay. I'm not going to call her out because she tends to pop up at really, really unopportune times. Funny story. I actually was trying to get Siri to answer a question for me in my last video. So this is last semester back spring 2025. Would not answer. And then I asked Siri to tell a dad joke, and it popped up and said a dad joke. Okay. So so it was kind of an inopportune moment there. But bots exist just beyond that, but that's the most tangible example or most tractable example I come up with. So this is one that I like. The next one is one that I absolutely hate, and that's natural language processing. The common occurrence frequency that you'll see of this one is when you see chat screens or chat helpers on for customer service on websites. So the one that it really comes up quite frequently for me, because it's the one that I probably most frequently visit that has this, is Kirksville Motor Group. So north of town, I bought both my cars there that I've had since I've been here at Truman State, and they do wonderful work, and their customer service is great, except for the fact that the website has a natural language processing bot on it that pops up at inopportune times. So I'm going to tell you, for the time being, if you ever see that come up on a website, do not respond to it because it will start flowing, and the text will start flowing, and it will bog you down, and it will just answer questions in a way that seems completely counterintuitive. And the reason why is that it's not actually answering questions. It's a predictive text analyzer, similar to the way that we thought about AI previously. And it just basically says, based on the question that's asked, what should a logical response to this question be? It will wind you around in circles and give you redundant information forever and ever. How did I know this? Because I tried it one time to see if I could come to a conclusion. and it was not helpful. Now, maybe that's just my own personal experience, and that's one example. But a lot of organizations do think that these tools have a lot of help in the future, and they're going to be represent some potential. So there was a Asian organization called Dukan. This is about 2 years ago. They were in the news because they cut 90% of their customer service, their live customer service representatives, in lieu of a AI program that could actually answer questions for them. So there's, even though this has kind of been proven to be not to where it needs to be currently, there's a lot of organizations right now that are betting big that this is going to be something that's going to be viable in the future. Something that's going to be very relevant with respect to a lot of your operations in business and accounting is robotic process automation. So basically RPA, or as it's called, is basically something that we can use to represent recurring activities within a process area or an organization. So my best example of this are these things called confirmations that we use in auditing. So without going into much detail, a confirmation is basically a request that we make to a third party. So if I want to reach out to a whole bunch of customers of my client, I've got 100 different customers I need to reach out to. If I did this 20 years ago, I had to have a big spreadsheet that I did a mail merge, and then I still had to fill in the blanks on how much was actually in the receivables balance. So it could be like a 10 to 12 hour process to go through and do all of this. Now, if I have a spreadsheet that's got all the information and an RPA tool that can read this information, it can create 100 confirmations in like 10 seconds or less, okay? It's very, very quick and very efficient, and it does mundane tasks repetitively very, very effectively. Then we have one that I think you're all going to be familiar with. This is going to be machine learning, okay? And this is kind of the context that we talk about for our large language models that we've been using this semester in the course. They're LLMs, such as ChatGPT and Copilot. Now, this is kind of the current iteration of generative AI, and depending on who you talk to, they will say that ChatGPT is or is not generative AI. It really depends on scientists what their perspective is. A lot of people say we're not to generative AI yet. Some people say this is the first iteration of generative AI. But the idea behind machine learning is that it can actually learn and evolve and develop based on the way that it develops from the machine learning system, especially depending on how complex the system itself is, which we're going to get into now. So machine learning is very interesting because I think we're starting to see a lot of evolution in this. I shouldn't say I think, I know we are. We're starting to see a lot of use of this in a lot of different pathways, and it's only going to become more and more evolved and more complex over time. So machine learning involves the computer's ability to learn from experience rather than specific instructions. Now, you probably heard this conversation before, and you probably heard this in context before, because this is the way we describe ourselves, is that we learn from experiences rather than instructions. So even if I give you instructions, of course, to tell you how to do something, you do need to repeat that in some form to be able to ingrain that. And it's the same idea behind machine learning, is that machine learning is going to repeat something over and over again until it gets it right. So machine learning is a category of artificial intelligence. So the way to think about this is that artificial intelligence is a big block or a big oval, and machine learning is a subset of artificial intelligence. Now, with respect to that, we've got something called deep learning. Has everybody heard the term deep learning? If you went to the AI presentation a few weeks ago in the TrueBiz forum, our moderator talked about deep learning within the same context that we're going to talk about today. And if you can go back and review the notes on that, what we're about to say is very consistent with what our moderator was saying in that particular context. But it's a complex form of machine learning. Basically, it's trying to emulate the way that humans reason and think. And that operates through something called neural networks. Now, you can think of neural networks as kind of a minimized model of a human brain. So we evolve through pathways, and basically we create new pathways depending on how we approach a problem. So the easy way to think about this is, imagine that I give you an essay question, okay? I'm not going to give you an essay question for the exam. This is not a writing enhanced course, but imagine I give you an essay question for the exam, and you answer the essay question, and you put down your words on paper, and you provide the result to me, all right? Then 1 week later, I give you the same exact essay question. Are you going to answer it exactly word for word, verbatim, the way you did previously? It's probably going to be close. It's going to have the same themes and concepts, but you're probably not going to use exactly 500 of the exact 500 words in sequence and order. The way you will express yourself will differ every single time. That is a characteristic of how we use subjective analysis as human beings, because we can get to the same result, but we follow different pathways in our brain to get to that result every single time. Machine learning and deep learning in particular, the neural networks follow the same pattern as they try to get to a result, but they can follow different pathways, which is why when you see deep learning mechanisms and even machine learning tools, you come up with different results every single time you ask the same question. So with neural networks, they're mathematical models that convert inputs to outputs and predictions. Again, every time you put in a particular query, it develops a new pathway to actually come up to that query. It doesn't use existing queries. It uses existing information and existing results, but it develops different pathways. So complex multi-layer neural networks, these are what enable deep learning. It allows machines to solve sophisticated problems, but it also creates significant model complexity, which is why we can't really disentangle everything that goes on in the human brain. We can't create scaled comparisons to the human brain. Computers, by comparison, are very minimized versions of the human brain, but we're getting to the point now where we're starting to see things that are very close to emulating how we think and how we reason. And if we can get to actually the point where computers can be developed to be effective representations of the way the human brain operates, then we're going to get to the point where they can actually do critical thinking and problem solving. And if that's the case, look out, world. So when the Terminators take over, okay, that's when they take over, because they say, well, human beings are really unnecessary. And by saying that on a video that's going to YouTube, I probably just added to that problem. So I apologize if the apocalypse comes next year, guys. It's my fault. My bad. All right. So when we talk about machine learning tools, there's generally two categories of machine learning applications. So we have classification. Classification is very easy. Classification is basically saying we're going to assign a label dividing the input into output groups. And usually the output groups are one or the other. So the way to think about it is going to be yes or no. Does it meet a particular criteria or not? And if it does meet a criteria, we take one action. If it does not meet a criteria, we take a different action. So the easiest way to think about this is your junk mail folder. So junk mail filters in your email inbox. Junk mail filters do their best to try to identify email that you do not want to read because it's basically sent out to multiple participants hoping to incite some sort of response and with no real value to you. So anything that's filtered in there, we're saying it's spam. Anything that goes to your inbox saying it's not spam, which is just, again, a classification, a categorization of information. So that's the first category. The second one is probably going to be very familiar to most of you because you've heard this term before, but it's regression. This is where we seek to predict real numbers through the analysis. So regression basically seeks to assign a value to something. Now, much the way that you would do a regression in statistics, we look at multiple variables simultaneously, develop an equation, and then based on the inputs, we predict an output. So as long as we have all the necessary inputs, then we can develop a regressive output. So an example of this would be price of a house or the revenue in next quarter. Now, how can we think about this necessarily just in one or two areas that seems very, very shallow? You say, Dr. Barnes, it seems like these machine learning tools do a lot more than this. And your answer is you're absolutely right. These are what tools can do, but oftentimes machine learning tools will use these tools together to develop more in-depth queries or more complex queries. So some examples of these would be how we actually use these tools in unison. So the first two are going to be very basic classification questions. Is it A or B? So we're selecting between two choice. Is it different? Yes or no? Then we talk about how much this is a basic regression value, but how are these alike or what should I do next? Those incorporate both regression and classification together to come up with a more robust question and a more robust answer. So there's ways that we can mix these machine learning opportunities to come up with much more in-depth analysis. Now, this next slide is one that I think you should very heavily focus on because, first of all, there's a 100% chance that I will ask a question from this slide on the exam, if not multiple questions on the exam, okay? So these are the types of machine learning, and this is one that's very, very prominent and pronounced right now. This is how machine learning tools evolve. So the first category of machine learning tools is called supervised learning. The output is a known set of values. This is usually a training tool for machine learning. So we know what the result should be. We give the machine learning tool a problem and see, can they replicate that result? If the answer is yes, then the machine learning tool is effectively available to move on to further stages of training. If the answer is no, then we go back and we say, you have to try again, but this time think about it from this perspective. So these were going to be, supervised learning is going to be something that was used very, very heavily on early stage AI tools, machine learning tools in their inception. Then we have unsupervised learning. This is basically where we say we're going to let the machine learning tool loose. We don't know what the results will be. So we use unstructured data where the output is unknown, okay? So this is going to be similar to supervised learning, except we don't know what the results will be. We want the machine learning tool to tell us and kind of evaluate the structure of those results or evaluate the context of those results. Is it sensible? Not necessarily is it correct. Now, kind of in between there is going to be something called semi-supervised learning. This is going to be extremely powerful because now we can kind of use machine learning tools to fill in the gaps. Has anybody ever kind of looked at a data set and then found that the data set was missing information or missing some sort of detail within the information that made it very hard to interpret what the data set was trying to tell you? That is a real problem in today's day and age because a lot of data is incomplete or is noisy. So having machine learning tools that can kind of fill in the gaps and figure out what's wrong is going to be very helpful. So we have data are labeled, but some labels may be incorrect or missing. So the computer is going to discern value for the incorrect and missing outputs. So we're going to incorrect and missing outputs. So basically what we're going to be looking at is that we have information. It's not complete. It's not fully detailed, but the machine learning tool can actually solve that problem just by using best guesses. And then one that's really, really powerful, and the one that's kind of the current iteration of machine learning tools, is reinforcement learning. That's machine learning by trial and error. Now, I will say that we're starting to evolve even past this, simply because a lot of our LLMs nowadays, our lot of machine learning tools, have got a lot of basis for their analysis. But if you go back to like 2022, 2023 with ChatGPT, this was how it was learning a lot of the time, is through the trial and error. You would ask it a question and said, okay, what color is a fire truck? And we'll look online and say, a fire truck is red. You say, good, that's right. Say, what color is a police car? It says, police car is blue. It says, no, police car is black and white. Try again. And when it used the frequency of interpretations to adjust its conceptions of what the answer should be. I will say that this is not as common nowadays, simply because a lot of these questions have been answered many times over, and it's become very good at the interpretation. It still struggles with certain concepts. But back in 2023, whenever I would ask it a particularly complex question, it would get the wrong answer. It was really polite, but it would be very confident in its wrong answer. And I would say, no, that's wrong, and I would explain why it's the wrong answer. Nowadays, and this happened last semester, and it was really frustrating. It was just saying, okay, here's the answer. I said, no, unfortunately, that's wrong. I'd explain it. And then it argued with me. Okay. And it's tried to say, well, no, this is an incorrect interpretation. And the reason why is this. I said, okay, you don't get to argue with me because one, I'm an accounting professor with 15 years of experience in this context, 20 years if you count my public accounting experience. Two, I wrote the question. All right. So yeah, it was a very interesting argument. I 100% knew I was right because I was the one who created the question. I had certain context and at points. I had to argue with it for like 10 minutes before it actually saw my point of view. And even then, if I went back and revisited the question, it still gave me the wrong answer. So machine learning is a lot more difficult, or this trial and error learning, this reinforcement learning is still a lot more challenging. We're not quite there to 100% yet, but we're a long way in. So there's certainly going to be opportunities and concerns with AI. And I could talk about the list of these that I could generate, but what I decided to do to kind of wrap up is I said, let's see what Copilot has to say. Now, I want to clarify that when I asked Copilot, I said, let's keep this to a concise list, okay? Let's make sure that each response is 20 words or less, and it did a pretty good job. So I said, what are the 5 biggest opportunities? It said automated bookkeeping, fraud detection, predictive analytics, tax compliance, and audit optimization. So biggest opportunities for AI in accounting and business. And I will say that I think these are all very valid. Predictive analytics are ones that I think are going to be very important in the future. That reflects back to what we were talking about in data analytics. Having the machine learning tools do this for us and the AI tools do this for us could be very compelling, because that would mean that we don't have to have the same data analytics skills in that area. But what are some challenges in the area? Data privacy, certainly problematic. Regulatory uncertainty. We don't know how to regulate these technologies. That's true for both blockchain and AI. There's bias in algorithms. If you attended the presentation on a couple weeks ago, that was one thing they were really heavily emphasizing, is that bias, if the algorithms themselves are not good, then they're just going to run that pre-existing bias and it will never get corrected. It will just get worse over time. Integration complexity. How do we use AI tools with existing infrastructure? That's certainly problematic. It's not something that's readily answered. And probably the most important one for you all that's in this room that's relevant is skill gaps. There's a statement that was made, and I've said it probably multiple times in this course, is that AI will not replace jobs. That's suspect by at best. But AI will certainly, people who can use AI will certainly replace people who can't use AI, which is part of the reason why we're taking so much time to talk about it in this course, because at some degree, I want everybody to be comfortable using these AI tools moving forward. All right, homework on Wednesday. Have a great day.